can impact the insurance policies, review their existing coverage, and determine what precautions they need to take in order to control their losses. In today's webinar, we focus on the potential insurance exposure associated with COVID-19 and how different forms of coverage could respond. For example, with WIBA, in instances where employees believe they contracted COVID-19 at work, for example, a healthcare worker at a hospital, is this disease occupational in nature, or is that the pandemic? And what precautions should organizations take to prepare for a claim? So to help us unpack this topic, please welcome Alex Mungai, who's the CEO of Ashikii Limited and an expert in matters insurance. Some of his notable achievements include restructuring insurances for companies with annual sales ranging from 200 million to up to 30 billion. He holds a BA in economics and political science, so I'm not sure whether he ever plans to run for governor for Nairobi, but also is a certified public accountant and a certified secretary and a member of ISPAC, as well as ICPSK as well. So karibu sana, Alex. This is the IHRM webinar, and it is a pleasure to have you. So the platform is now yours.
Thank you so much, Rose. Thank you for the kind introduction. So my name is Alex Mungai, as you've been told, and I am one of those who are very passionate about insurance restructuring. It's something we've done for almost 10 years now, and we do enjoy. I think the greatest opportunity about insurance is watching a family that has lost everything recover a little bit of their funds, watching a home that has gotten burnt. You know, when you tell the family not to worry, the home, because of the policy that you had, is covering you for almost every aspect. So really, it's about security. What kind of security does an insurance provide? And you know, we found over the years that a lot of the times the devil is in the detail. The devil is in the product that you're buying, the price that you're paying it for, and what you even need to look out for. What is it that you want? What are you covering? You know, is it enough to just say our business is secure because we have WIBA, our business is secure because we have medical? And it's interesting that Rose started off with WIBA because, in fact, that is one of our greatest areas of understanding and something we've noticed in a lot of businesses, that there are a lot of issues. So maybe I can just start off by presenting a little bit about Ashikii. And we were formed in 2008. And we have actually structured assets, even for one company, worth over 10 billion. So we do understand, you know, great risks, you know, because you're talking about $100 million is a 10 billion shilling asset base. And that's a lot of money. Even for an insurance company in Kenya, that is, you know, most likely that is not even going to be insured. It will be reinsured outside of Kenya, because not many insurance companies can handle that kind of balance sheet. We are talking about protection of people's well-being, protection of people's assets. And we do this mainly from a restructuring point of view, understanding what are the risks, what are we trying to cover, how do we cover it, and what is the optimal cost. In fact, there are some times when we say, if you can't do it right, then maybe you need to do it differently, just to make sure. So we can go through some of our corporate identity, which is we want to be the leading business advisory company in Africa. For us, it's about great potential for the business, optimal resource, meaning you're not spending too much, you're not spending too little, you're spending just enough. There's no point spending too much on something that won't help you. There's no point, again, spending very little. And for us, it's about all stakeholders. So we are looking at, sorry, let me just put this on. So we are looking at the company, we are looking at the shareholders, we are looking at the directors of that company. We are looking at, even most importantly, the employees who go every day to work for these families, to work for these companies, to move them forward. So we are very happy. Thank you so much, Institute of Human Resource Management, for allowing us to do this presentation and for calling us to do it. So we'll go straight to the point. We can't cover all the insurances because there are so many. And in fact, even here, these are not even all. There are so many more that are not here. So we've decided to try and focus on those that look like they affect HR the most, and see what can we do about those. But in actual reality, there are a lot of insurances and there are a lot of risks that need to be covered, and we need to look at all of them together. So let's look at WIBA. WIBA, as you all know, I know you're all HR people, so you're very conversant with WIBA. And WIBA is actually a law. In fact, when we say WIBA insurance, it's not really accurate to call it WIBA insurance, because WIBA is a law, and the law is the one that dictates what is to be paid in insurance. It is not really the insurance companies that state what is to be paid. And that's a very important point when we are talking about WIBA, because many a time companies will tell us we have WIBA insurance, but does that WIBA insurance completely follow the law to the letter? And that's always a big question when we are discussing WIBA, because we are talking about if a CEO of a company who earns $1 million or $2 million a month passes on at work due to a work issue, we are looking at that person earning 24 million a year or 12 million a year. And in 8 years, that's 96 million. And the WIBA cover needs to pay for that. That's what the law says. That's not optional. It is not something that you can discuss and negotiate with the dependents of that family. You have to pay that 96 million. And when you then look at the WIBA itself, and here we are looking at it specifically on focus because we've been asked to look at it from a COVID point of view. So we are really taking it from a COVID point of view, but there's a lot of questions that we can ask around WIBA, even outside of COVID. But for today, we are going to stick to COVID and try and see what is covered, what is not covered, and how does WIBA, the law, act, because we are, the insurance in itself is a private contract. It does not have to follow the law. And so, which is why I'm saying when we define WIBA insurance, we need to be very careful that we are actually saying we will cover the law to the letter or we won't cover the law to the letter. So we can start off with some interesting ones. Your colleague is working at home. So in this aspect, your HR, your colleague or one of your staff members is working at home. They break their leg during office hours. And this happens because on a Zoom call, for example, the cleaner at home left water on the floor. You are attending to an important Zoom call. You are walking out, and you are just about to close a transaction for the company, close a client, negotiate with the bank, and before you know it, you're looking up at the roof, and you're in pain. Your leg is in pain. Will that be WIBA? And we are going to look at some of the different aspects of it. What happens if, and this is a complicated one, what happens if you die while driving from home to a client meeting? And in this scenario, we are discussing COVID-19 related. So it means you are actually working at home. It was 10 o'clock in the morning. You are driving to a client meeting, and there was a fatal road accident. And is that WIBA? Will it be covered? You went to work, and one of your colleagues had COVID-19. So again, you have contracted a disease at the office. Is this WIBA? Then interesting one. So somebody was making you tea at 10 o'clock. Your fingers got burnt, and you are now disabled. But you are, your hands are what you use, especially for a lot of people today. They use their hands to do almost everything, to type their work, to send emails, to make phone calls. So we are then looking at what are the scenarios around, or what are the solutions to some of these scenarios. So let's start with the first one. What if your colleague or yourself, because this is also not outsiders, broke a leg, and you are now disabled for quite a while. Now, WIBA in itself mentions disability. So there has to be some disability. So breaking your leg, in this case, we are not mentioning that you broke a leg, you put a cast, and now you're walking again. But in this scenario, we are saying you dislocated an aspect of your foot or your leg, and you might not walk for the next 2 or 3 years. So what would, from an insurance perspective, what would the insurance people be looking at? So did it happen during, especially at the office? Because WIBA actually states that the place of work is where these injuries are to happen. So did it happen at the office? Was it during working hours or attending to work, or both preferably? And then again, because these are COVID-19 scenarios, we are being forced, literally almost being forced by the government or being forced by survival to social distance. Therefore, we are being told we have to work from home. We have to work from, we have to social distance ourselves. So it's not exactly optional. I did not, as an employee, I did not go to my boss and tell my boss, I will work from home. And I have no choice. So what would be the only scenario I see, and for me, this is payable. This should be payable. But the debate that we're going to have is it a workplace? Is home considered a workplace? Because the WIBA law does mention that it must be at a workplace. And then, of course, the question that everybody is going to ask is, if it's a workplace, and if we define it as a workplace, then who is the occupier of that workplace? Is it the business? Is it you personally? So it raises a lot of interesting questions, because then in one aspect, you can say yes, but in another aspect, who is really liable for your home? Is it the owner of the home, or is it your business? So some potential solutions to this, and these have been in the market for a while, is sometimes it's just easier to maybe put it under a GPA, to add a GPA, and GPA should not cost much more than about 30% of what a normal average WIBA product should cost. And for that, then it reduces the doubt, because GPA is essentially a group personal accident cover, which goes in hand with a WIBA cover, because WIBA is supposed to be work related. It's supposed to be regulated, so because it is then governed by law, but GPA is not. So it's not compulsory to have GPA. But maybe right now, those companies who do not have GPA, this might be a good time to invoke a GPA extension into your WIBA, because then you can see there is a lot of gray areas when it comes to what happens next, what happens in this scenario. And that's why now I was mentioning earlier, an argument can possibly be made that, as defined by the Occupational Safety and Health Act, a workplace includes any land premises, location. So essentially, wherever you work from technically can be called a workplace. But then when you go then to the Occupational Safety and Health Act, which is where a workplace is defined, because in the WIBA law, it doesn't quite define a workplace. A workplace is a place, there has to be an occupier of that workplace. But with GPA, all this is removed, because then there is no debate. Whether the injury happened at work, whether the injury happened at home, it will be covered. It will be tax deductible for the company. It will be a non-taxable benefit for the employee. So there are a lot of pluses that come in with having a GPA. But as I said, if you really want to stretch the debate, you could possibly stretch the debate and again, look at the private contract that you have on the WIBA itself. And, because as I said, the private contract is separate from the WIBA law. If your WIBA insurance contract does not specifically define place of work, then wherever your employees are working technically can be a place of work. I mean, the equivalent could be if an employee, for example, if there was no COVID and an employee went to Kisumu for a business meeting, that's still not your office. So really, technically, it's not a workplace. So again, it should be covered. So potential scenarios, you could take the argument, or you could make it very easy for yourself. You could also have a GPA that essentially then removes all doubt as to what is an accident and where did the accident happen and how did the accident happen. So those questions now don't really arise as to the WIBA law in itself. Now, this one it's very tricky because, technically speaking, you're in transit. And In this case, you are actually going for a meeting. You have been working from home. You're going for a meeting. It is during work hours. The debate then, should be plausible. We've had a number of clients where we've added this clause to and from work or to and from designated business meetings, and this should not be something very difficult to negotiate with the insurance company, because this person, the only controversy that would come in is, for example, if you did take transit routes, you on the way to your meeting, you passed by the local supermarket, and then you went for the meeting, and the accident happened between the supermarket and the meeting, and then it gets a bit controversial as to, was it because you went to the supermarket that the fatal accident happened, or if you had just taken a direct route to the meeting? So, but for me, and I strongly believe that is the case, that this should be covered. This would not require, for example, a GPA in itself, but it should be covered because that is what WIBA does. So going on to the next one, where we look at, again, the potential solutions are the same. If you do have a GPA, then obviously there is no issue with that. It will be covered either way. But even if it is, you do not have a GPA, in my opinion, this should not be an issue. Going on to, now I know the question that everybody is asking. My colleague got infected with COVID-19 at the workplace. So here we are not technically dealing with the person with COVID-19. We are dealing with the person who got infected with COVID-19. We're going to deal with the person with COVID-19 on the issues to do with medical. So will WIBA make payments? So we looked through again the WIBA law and just tried to understand, can this be considered to be an accidental injury? Now, accidental injury usually is defined as a forceful, violent. Those are the words normally used when you're referring to an accident: forceful, violent, invasive, usually external object that pierces the body or injures the body. And so obviously then COVID-19 gets tricky to define as that. But then, we could then also say occupational diseases. Can we then call it an occupational disease? And, again, the problem then comes in terms of the occupational diseases are already defined under the WIBA law. So again, we looked through it, and the closest we could get to COVID-19 was TB. But again, I'm sure the framers of the WIBA law could never have foreseen all these things that we are seeing today. These are new scenarios that absolutely very few people could have predicted. So the most of the other diseases are silicon poisoning and usually metallic poisoning and fumes and dangerous gases. But there is no mention, other than TB, there is no mention of another disease. So again, good question. What if I'm a nurse? Technically, a nurse should be covered. The possibility of getting infected at the workplace from any disease for a nurse is completely plausible. And we shouldn't have to victimize our healthcare workers because of this kind of scenario. And I know the government is trying to pass a new law that is now saying, some occupational health and safety issues should be covered. But when we look specifically within the framework of what we have at the moment, it gets to be very difficult for it to be covered. But there are solutions for these problems. For example, we would really advocate for group life rather than taking the argument of WIBA, because group life will more or less cover for any aspect, any kind of risk. Almost all risks in the world are covered by group life. And if you have a cover that isn't doing that, then that's probably not a very good group life, because group life is in fact, they are the easiest claims to pay. Short of fraud, of course, with the exception of fraud, group life is some of the most easy insurances to pay. So there is a debate. So I'm sure we are going to be having further discussions on that, and we're going to discuss it under the group life, we're going to discuss it under the medical, but there is a very easy solution to that. So if we can go now to medical scenarios, which is now my employee, the questions that we are all asking as Kenyans, myself included, is if I have been quarantined, I am not COVID-19, but I have been quarantined, I have been forced to pay. Who will pay for these costs? And then question number 2 is, I am COVID-19 and I am therefore positive. Therefore, there is no doubt that I am sick. Who will pay for these costs? I have underlying conditions and have tested positive for COVID-19. Will this be treated? Our employees are registering very high levels of stress. I mean, this is a stressful time. You can imagine HR people could do a lot of interventions. You could do team buildings. You could bring people together. You could notice or observe an employee that is sagging for some reason or another due to some stress of some kind. But now here we have videos, yes, but generally speaking, you have a Zoom call for 1 hour, but that's it. A lot can get hidden away. So our social interactions have changed. People are getting stressed. Number 5 is, can I take my COVID tests, and who will pay for these costs? Right now it's not, I'm sure it's all over the press. Very many Kenyans are fearing to do the COVID-19 test because of the repercussions or because of just the social stigma. You don't know what will happen next. Will everybody abandon me? Will my family abandon me? And already even from the onset, you're not even sure who's going to pay for this cost. So we are going to try again briefly to capture what could happen in this scenario. So my employee has been quarantined. They are not COVID-19 positive. Now, the biggest argument against this cost for the insurance companies is they are saying you're not sick. Now, medical is to treat sickness. Medical is to prevent sickness. But now here, you're not sick. You have actually not been found to be sick. So are you actually liable for a refund for your costs? So every insurance company will take the argument of this is a pandemic. So for now, we can just assume every insurance company is going to mention the word pandemic in every discussion that they have with you. So let's just leave that. I will mention it now, but I wouldn't have to mention it all over again. But let's be clear with that. And now let's try and figure out a solution around that, because that is the argument they're all gonna take. Potential solutions. So some insurance companies have undertaken it and said, look, this is a risk. You may not be sick, but you could potentially be sick, or you have been detained against your will. And therefore, we find that to be a risk, and therefore we find that to be something that can be covered. So this has happened both locally and internationally. Now, of course, many insurance companies are also saying, look, how are we going to pay for these costs? And so there are those who are arguing for, there are those who are arguing against. Most international medical insurance companies are also covering. So the first one is some local. The second one is most of the international insurance companies are covering it. And then if it was quarantine due to travel related, I don't see why travel insurance, if you have the right travel insurance, they should have covered for it. Because detaining anybody should be part of any standard travel insurance. And this travel insurance has been around for many, many years, and therefore they should have foreseen this kind of scenario. So for medical, maybe a lot of these things could be new globally, which is why we are finding it a lot in the international insurance companies. But for travel insurance, no, I don't think that should be an issue in terms of covering any quarantine costs if one is forcefully detained by the government for the safety of the community to ensure that they are not sick. I am COVID-19 positive, and here is the real
debate that financial services are having and trying to figure out. And to be honest, there is no clear direction for most of the insurance companies on whether they are covering it or not covering it. But let's look at some of the statistics and see, potentially, could it be covered? So, when we look at as late as, this week, the global death rate has been 263,000 people. The total infections, these are the reported infections. Now, for most countries, they are stating the infections are probably much higher than that, maybe 5 times, 10 times, 2 times. We don't know because many people this is a flu-like symptom. So some people are just staying home, healing, and continue on with their lives. So, but if we take the scenario that we have, it's a 7% death rate. If we look at the death rates in some countries, for example, in Germany, it is 149 people died, over 30,000 people infected. And these are again reported infections. So that's about a 0.35% death rate. If we look at infection rate to population rate, we're looking at 3.7 to about 7.8 billion. That is 0.04% of the population. If we compare then back to the last world disaster, which was the Spanish flu, where they were talking about 25% of the population. And again, all these are the estimates that come because even at that time, population data was not very clear. But even if you see 10% of the world population, we are not talking about of the infected people, we are talking about of the world population, then surely there could be an insurance case for COVID-19 being covered. I mean, we have again, we can look at even specific data and say, look, Kenya has, I think we said over 70% of the last population census, 70% of the people are below 35 years. So we have a very young population. And in fact, to prove this point, when you talk to most medical insurance companies, their claims have gone down by 40%, not up, down. So do we have an argument? Maybe. Can the insurance companies maybe look at it and do some actual data? Probably. I mean, if we continue with this data, then it should be possible. What are the issues affecting the data for insurance companies, which is also understandable? There is very little data on what happens next. Nobody knows whether we become Spanish flu or whether this thing dies down slowly. So when you're trying to do an actuarial model of shall this become full-blown, or shall this dissipate and we shall remain within the 3%, 4%, 1% range of infections. And here, of course, from an insurance point of view, the interest is not really the death rate. The interest is, well, the death rate is important from a group life point of view, but from a medical point of view, the interest is in those who get infected and go to hospital, because that is where then the costs come in. And so far, the data is showing no, the people who actually do get to hospital are very few. And so and this again, these are all again personal opinions, and when you look at the data, you find it should be able to be covered. It should be able to be covered. And maybe hiding behind the pandemic issue is something that we can discuss and say, look, how much capital do we need to cover this? And the international companies are covering it all. I think as far as I know, all the medical insurance companies, international medical insurance companies are covering it. But the insurance policy is contractual in nature. So we have to look and see how many people do actually have their contracts mentioning COVID-19 or not COVID-19, but a pandemic has not been covered. And here's where I think as the IHRM, and all these other associations, ISPAC, IHRM, FKE, we need to come together, AKI, Association of Kenyan Insurance, and also say, look, can we work towards the future? because I think we've had lots of warnings about this. I mean, we had SARS, we had the bird flu, we had Ebola. What preparations did we make? Not just as Kenyans globally, but even as Kenyans, what preparations did we make to cater for this? Did we provision some capital? If it's insurance companies, did we agree to say, look, can we pay a little bit more if this ever happens? Then we are cushioned, because frankly speaking, what the insurance companies, if you look at their capital, and we'll mention this towards the end, there is not enough capital to pay if everyone got sick. There simply is not enough money. But there is enough money if we plan in the long term and if we allocate capital in the right way, then there is potential. If you look at Germany, for example, the reason why some of them are saying the reason why their COVID-19 cases are so few is because, one, most people are not stressed. So because there is very good, almost unemployment insurance. So, and stress is also one of the factors killing a lot of people. And number two is they have enough ICU beds. So there's been a lot of investment in ICU beds. And number three, they have very well capitalized companies, insurance companies. The question to ask is here, whether we have that. I leave it out there. I'm not saying we are not capitalized or we are. What I'm saying is, are we capitalized enough to cater for something like this as it is? Okay, going on to underlying conditions, these are naturally covered. This, unless your insurance company is escaping, any underlying conditions will be covered. So the only question here would be, what will the government do? Because as we are hearing, a COVID-19 case, if you are confirmed, the government takes charge. So the government takes you to one of their designated hospitals. However, if you do have an underlying condition, cancer, diabetes, some of these COVID-19 healthcare facilities might not have the facilities to cater for that, because they are specifically designed to cater for infectious diseases. And therefore, your insurance company should be able to pay if the government allows you to be moved to another hospital, which has those specific equipment and is able to cater for your specific needs. Because this is also contractual. This is why you take insurance, to cover you for some of these medical conditions. So going on, so we've mentioned a little bit about higher levels of stress. I'll move a little bit faster now. Most medical insurance companies should have psychiatric benefits. Many times, I remember when we started off, we would insist on this, and now they have become very standard products, benefits in many medical products. So you should be able to have this, and this should be able to be catered for without any too much of a fuss, considering now even HR interventions are much less and difficult to do. Again, many medical insurance companies are catering for medical costs as to testing of COVID-19. So again, this has become now standard. And we are happy to note insurance companies are trying now to kind of meet the test or meet some of the needs that are arising on a day-to-day level of the things affecting many people. So group life. Again, this group life, as I said earlier, should cover any kind of death. And I think it would be, unless, of course, it's a contractual relationship, but the essence of group life is to cover you for death. The question of asking, why did you die, should really not be an issue that we should be asking when we are saying we are selling protection, when we're saying we are selling security. Unless it is fraud, of course, it should be covered. So in fact, some group lives even now cover for suicide, which is unfortunately some of the things we're going to start seeing, with socially people don't get proper psychiatric treatment. I mean, we saw the other day a lady took her life because of being quarantined. And so these are things that we can probably start seeing. And you should then look at your contract and say, hey, do you cover suicide? Because what happens to the family if your group life doesn't cover suicide, or if your group life doesn't cover pandemics? And if you look at most life insurance contracts, the mention of pandemics it's not really there. It's not one of the things I think many people thought about. Critical illness, again, the debate is this a critical illness? Critical illnesses are already defined again in the contract, and most contracts are similar. They define critical illnesses are difficult diseases, long-term diseases, and fatal diseases. Now, COVID-19, fatal, yes, but is it long-term in nature? Is it difficult to treat? Again, questions that we can debate about, but from this perspective, it would be a difficult sale to call it a critical illness. And then property, are we thinking about our staff? If a senior staff member or any member actually loses their computer at home, is that covered? What kind of property insurances do you have? Are you looking at, the insurance will probably ask you, did you cover it as assets, or did you cover it as furniture within the building? And we're going to get a lot of these. Potential solutions that we're looking at is putting them under all risks, because all risk then doesn't ask where was the computer when it got stolen, where was the laptop when it got stolen, where was the iPad or the phone when it got stolen. We find a lot of companies have put everything together as assets, covered it under fire, and they say they are adequately covered. Or even sometimes we find companies have done both. They have put the laptops under fire and all risk, and then that's your all risk, and then they put it under all risk in itself, and then you're actually paying twice. But all risk is a little bit more expensive, but it then doesn't ask where was this, because it's essentially geared to cover mobile assets, assets that move from place to place and can be at any one location at any one point in time. What about data? So again, there are a lot of extensions for electronic data. And you will find this in most insurances. And if you don't have it, you should ask for it. So because we are going to see a lot of data getting lost. I left my laptop, or I accidentally deleted my data, or I accidentally inputted. When you have 30, 40 people working from various locations, reading into the same database, a lot of things can happen. And this is a good extension to have for your data, especially data breach and data loss. But key, and what is always advisable, is it's a good time to have cybersecurity. We are just looking at a scenario. Your website has been playing very well, and then yesterday it started showing people playing video games in Russia, and you have relocated to Russia, and suddenly all your clients are thinking, especially in this time, that you have collapsed. So cybercrime now, which it was not a few years ago, there were very few insurance companies offering cybercrime and cybersecurity, but now you find it in a lot of companies, and it's very important to read through the details to understand. The biggest risks, of course, is data loss. What are the consequences of that data loss? And as to your business, that is, in terms of your profit. And very importantly is there a liability risk of that data? I mean, if you expose all your client data to the world, there will be consequences. There could be lawsuits, there could be people whose credit cards are used to buy products in China or the US. So all these things are the things that you need to look for and make sure that they are all covered. And then customer data, that should be standard. Is it covered? Very important. In most cybercrime, it should be covered. Now, for our leadership, director's liability, a lot of companies now are performing at 50%, 75%, some even almost 100% losses. But we haven't changed our laws. We haven't allowed, I know we have brought in credit, no more credit reporting, but that has not stopped me as a creditor from suing my company, the person I've lent money to, and suing those directors and telling them, hey, I want my money back. Or my suppliers, if they have supplied me goods, I am going to sue the directors. I have at the moment the liberty to sue the directors of those companies and tell them, hey, you have failed to pay me. You owe me this money. And that then brings a potential liability to our directors, especially in their personal capacity. So if you look at Germany, they have passed a law stating that now directors' liability will be limited. and that is mentioned in the last slide. It will be limited now, just for this period. So, you know, they are not talking about allowing irresponsible directors from running companies, but really in this scenario, there are a lot of companies, for example, if you're a travel agent right now, I doubt you have any business. If you're a fuel station, there's very little activity going on. Many businesses are just essentially shut at the moment. So you may want to look at your director's liability and see what is it covering, what is the extent that it is covering, are our directors safe? And especially because we do not want them to get caught up in personal liability arising out of incidences of which they had no control. So to summarize, I'm sure Rosie is asking me, when are you finishing? So this is my last slide. We are looking at, and this is a challenge to Kenyans. We need to come together and we need to think long term. As I said earlier, the signs have been there for a very long time that there was going to be a pandemic. It came with Ebola, it came with SARS, it came with bird flu, it has been there for a long time. In fact, I think as a world, we've been very lucky that this, you know, it last impacted us so highly 100 years ago, but it's been there. And it has happened in the past, and we don't have to follow. If the world doesn't do it, as Kenyans, can we do it? For example, in the UK, flooding was a big problem. Insurance companies could not cover flooding because it was a pandemic. So they came together, private-public partnership came together and formed Flood Re. And then today you do not hear issues of flooding being a major insurance problem or indemnification problem for the people of UK. Here we look at, and then we also need to look at, are we getting the right products for the right price? You know, because one bank in Kenya earns more money than all the insurance companies combined. And here we are talking about profit. So are we really paying the right price for insurance? There's lots of debates, but if we are honest, when we look at the pricing, some of the pricing, not all of it, of course, I'm not advocating for prices to go up. What I'm saying is some of these risks, you know, when a bank lends you 10 million, it's lending you from a deposit of somebody else. When an insurance company says they'll cover you up to 1 billion shillings, they don't have 1 billion shillings in the bank. They have to go out and look for capital, look for insurance treaties. So essentially it is money that doesn't exist. So essentially insurance companies are supposed to survive not on investment income, but on insurance. Insurance premiums are what's supposed to run the insurance company. So if they're not earning enough from their premiums and they don't have enough money to invest, we are always going to have a capital issue. We're always going to need to reinsure. And the minute we reinsure, we also take money from Kenya and take it outside. And really, we shouldn't. We should be keeping this money in Kenya. We should be capitalizing our businesses in Kenya. We should be investing our companies in Kenya so that even when these shocks happen, we have enough. And for the client, I hear you. I am listening to all of you. There's a lot of people who also say, when I need insurance, it's not fair. We need insurance to work. There are people who say that, not everybody, but there are people who say, does insurance work in Kenya? When we look at our penetration rate of 2%, it's one of the lowest rates. For an economy like Kenya, we should be at the 8 to 10%, or even higher. We should be even at 16%. If you look at the countries that have very good insurance rates, insurance penetration, it's because they also have very good development, very good healthcare systems that are working for them, and very good companies that are paying well. So for me, this is a good chance to rebuild a new Kenya, and we can do it together. Thank you so much. Over to you, Rose.
Thank you, Alex, for that insightful session. I guess the first question then is, you talk about, are we paying the right price for insurance? So as HR professionals who are then tasked with medical and WIBA,
yes,
how do we determine what value for money is, given that we're not insurance experts?
The problem with insurance right now is we are not pricing products properly, and it is an industry issue. It has become very, very competitive. And so everybody, and of course we understand there are budgets to be done. So the two issues there is, we find a lot of people will pay more for the wrong thing, and then they will pay less for the right thing. For example, I'll give you a good example. Medical, for example, medical insurance, inpatient is more likely to cost much more for a person than outpatient. But almost everybody wants outpatient. But you know, when you have a serious disease, for example, when you have COVID now and you need to be hospitalized, it's an issue of life or death. Outpatient is not an issue of life or death in most cases. It is an issue of getting drugs, treatment, which will be readily available. Or to put it in another way, and you know, I'm not belittling 50,000 or 5 million. What I'm saying is, if you need 50,000 or 5,000 or 10,000 for outpatient, even if you call your family together, you can get that 50,000 or 5,000 or 10,000. But if you have just had a heart attack and you need to be hospitalized in Nairobi Hospital, and they are demanding 1 million, and it's 9 o'clock in the night, where are you going to get 9 million? So if we invested more, and these are the things I'm saying, that let's demand more of the more important, so it's more of a long-term thought. Can I stretch myself a little bit on the outpatient and get a higher inpatient? Because when the time comes, if it does come, and we hope it never does come, you're gonna need 10 million, you're gonna need 5 million, you're gonna need 500,000. And here, this is outside of the debate of hospital costs. So hospital costs and the Medicare costs, those I cannot get into them at this arena because those are now medical issues. But here we are talking about insurance issues. I would much rather have a higher inpatient so that if that time comes, there is 5 million, 3 million, whatever million, 500,000 available to pay for me, because it's a life or death scenario. I don't want to, in fact, it's more stressful for my wife or for my husband or for my brothers or for my father if they are at the hospital watching me being unable to breathe and they cannot check me in because they cannot raise enough money to pay for the bill. And it's the same for WIBA.
Okay. So a lot of companies renewed their insurance in December, early January.
Yes.
COVID hit around about March. What's the solution now? Do we go back and renegotiate? And would there be additional premiums to be paid?
I think, yes, definitely it's important to go and renegotiate. There may not be additional premiums because some extensions are not actually very expensive. And this is what we were mentioning earlier, that some extensions, in fact, you find, and this is why you need to be very careful, and you need to get the right people to look at your contracts, to look at your insurance contracts, because some of these extensions are actually free, some of them. You find them standard, but, you know, because you didn't ask for it, or because, you know, and everybody is busy trying to get a sale, and, you know, how insurance works, it works. Everybody is just trying to do a sale. And at a point in time, the quality aspect, which is why I'm really focusing on the quality aspect of it, can get lost. And then you don't actually put in these clauses. And we've done it several times where we've then insisted, no, we need this clause added, or we need this extension added. In fact, we don't know why it wasn't there before. And it's definitely a problem in the industry. It's definitely a problem in this country that, you know, policy documents or even these additional benefits are not being discussed and not being debated. And that's where now the price comes in. So I'm willing to pay this for this quality, and this one I'm not willing to pay because it's, you know, you might find I don't need it. Or if I need it, I can probably pay for it out of my balance sheet. For example, in WIBA, I can't, if my director who earns $1 million shillings a month dies, I can't pay 96 million. It's not possible. So, you know, but there could be other things I could potentially pay for, and I would rather subsidize the WIBA or the medical, and then I then have a much better cover.
Okay. So the questions that are still coming through are around, is COVID covered under medical and under WIBA, given the directive that IRA gave that it's covered? So perhaps just elaborate a little bit on that.
That is a good question. In fact, that is what we have been, you know, talking to the insurance companies about, because there seems to be, and this is, and let me just say over here, I don't want to lay blame on any party, and I'm not trying to lay blame on any party, because nobody had planned for this scenario, which is unfortunate. We just were not ready for this scenario. And you can see modern countries like the United States, even worse, United Kingdom, are even worse than Kenya. So maybe by luck or by we don't know why, but they just weren't ready. So Aki, being the regulator, did the right thing. They said, look, they don't see why it should not be covered. They took the argument that, yes, this is a pandemic and we understand that, but they are not understanding why it's not being covered. But the insurance industry then said, but pandemics are not covered. And that's the argument they're using. The pandemics are not covered. But two, and most importantly, is these are private contracts. So these contracts, unless legislated, which is why I have mentioned many times that we do need legislation. For example, the biggest debate about the healthcare bill, the Obamacare bill, and the biggest controversy was that insurance companies were being forced to pay for pre-existing conditions, which they didn't want to do. But you see, it was a law, so they had to pay for it. But our legislative framework needs to be discussed, because then IRA, we are waiting to see, but IRA and Aki, the Association of Kenya Insurance, are not speaking the same language. And we don't know, we cannot say for sure the legal framework under which a solution can be provided, unless they just agree right now as gentleman's agreement and they say, look, we'll cover for this. Because the insurance company said there is no data, they don't have data, they had not planned for a pandemic. Therefore, unless a contract, so basically what we are hearing from the insurance industry is, if pandemic was not mentioned in your contract, then technically speaking, it should be covered, because then we made the mistake, we did not put it. So that is at the moment the official position, that if it's not specifically declared or is not, cannot be held to be a breach of contract, they will cover. But some companies have actually gone out there to the public and specifically and categorically stated they will cover it. So it's not a one-size-fits-all framework for everybody, because there is no legislative background around it.
Okay. There's a question around cybersecurity insurance. Please elaborate on that and your thoughts around the coverage.
Yeah, this is a very important cover. I mean, if you look at it, and it really should be something that right now every company should be thinking about, because when we look at the advent of M-Pesa has brought in a lot more electronic data, even before COVID came into place. So, as I said, what are the biggest risks when it comes to cybersecurity? Your data getting lost. We all know how important the data is for. We are now running on big databases. Can you imagine if Safaricom lost all our data? This country would shut down, because M-Pesa would essentially shut down, and that's why they would never allow that to happen. Then we are talking about external liabilities, because most databases are not just internal, they're external. I mean, we do M-Pesa through Safaricom, but essentially it is my telephone, it is my money that is transacting through. So if my personal information got out there, then that would pose a serious problem. And then number three is, if there is a shutdown of our systems, our financial systems, that business won't function. For example, if you cannot process M-Pesa, I wonder what would happen in this country if M-Pesa would shut down for a day. It would be chaotic. So there are business losses that are involved. There is data loss, there is third-party liability. So those are the focus areas, I think, at this moment, because right now we have all these employees working from different locations. You do not know what is happening in these locations. You do not know who is accessing these computers. You do know every company has taken security measures. They have logins, they have passwords, they have all these things. But at the end of the day, there is limited control on there's an extent of the control that you can exercise around all these systems and who is accessing them. But the world has gotten better. Cyber security now is getting there. There are quite a number of companies now offering cyber security. 10 years ago when we began, we could hardly find a company. Today, there are a few companies that are doing so.
Okay. All right. I think the last question here is around the floods. I mean, we've seen the impact of it. Is that covered under WIBA? And what conversations should those living in flood-prone areas be having with the insurance companies?
Well, number one, and that is actually a very good question, and that's what we are talking about. There is a difference between WIBA and insurance. And WIBA is a law. So if anything happens to you while at work, for example, if you just walked into the office, you're doing your work, there was a flood, it's unfortunate that you passed on. The debate of payment or not payment is not a debate. It is payable. That is the law. Now, from an insurance point of view, I have not seen any insurance contracts. There are very few WIBA contracts that are declaring pandemics. In fact, I think the biggest issue for WIBA when it comes to this particular pandemic is that it is a disease. But for most insurance contracts we've looked at, we've not seen pandemic categorically or specifically mentioned as something that wouldn't be covered. And to be honest, the risks of the consequences of floods in this country, in my opinion, it should be something that should be covered. But we haven't seen it in many contracts stating that it's not going to be covered. We haven't seen that.
What is the difference between director liability and professional indemnity? Are they the same?
Good question. It was only because of time I could not mention all these things. I wanted to talk about professional liability, but yes, they are very different. And professional liability is one of the issues I could have mentioned here, but because of time, we had to cut down the presentation. Director liability is a liability of the directors of that particular company. And they are the people, in fact, it's called director and officers liability. So any liability that would expose the directors and officers of the company. So for example, as I mentioned briefly, if the company has refused to pay a bill, a supplier, the supplier could be sued, or if the directors, because of this COVID-19, have failed to do something, for whatever reason, for whatever it is, there is a potential that they can be sued, not in the company, not as a company, but in their personal capacity. And that is what the director and officer liability is there to cater for, to protect these directors, these officers. So an officer could be, again, a senior manager or somebody with signing authority or somebody who could be exposed as representing that particular company. Because as we know, companies are people, but the people who by law are liable are not everybody. It is the directors of the company at the end of the day. Everybody does, every managing director, every CEO, every GM, every manager, every assistant manager works on the direction of a director. Now, professional liability are liabilities that are due to a professional service provided to a client. So it is now, it doesn't matter who it is. So for example, at this particular point in time, auditors are at home, lawyers are at home, doctors, some of them are working from home. But if they do offer a professional opinion and they do give a fee note for that professional opinion at this time, and for some reason or another, there are issues with that fee note, specifically because maybe an email didn't come. It should have come from one of the other employees so that they can compile the data and send in the report, but an email did come. They thought it came, they sent the report, the client acted on that professional advice, and they have incurred liabilities. That is what now a professional indemnity would cover.
Okay, I know we are running out of time, but there's one question that I've been asked that I must put across to you. We have the locusts that have invaded the country. Some of the organizations that we serve are in the agriculture sector. What next for these organizations from an insurance perspective?
Exactly. Again, this should be covered, but the issue now, can we call locust pandemics? And this is why contracts are key, reviewing the insurance contracts and specifically knowing what exactly you want to be covered. It's not enough to just say, I want fire insurance, I want life insurance, I want motor insurance. We have to look through these contracts and understand what are our exposures and then know who will cover them. And whoever that is not able to cover them, it doesn't matter what price you pay. There's no, you're gonna lose that money in the end. Don't cover it. You'd rather go to the person who is telling you, I have specific provisions to cover these risks, and I will therefore cover this risk. And agriculture is one of those areas where our insurances have been very weak for many years, which is surprising because we are very big. I think maybe now not so much, but I would have thought that more than 50% of our economy was agricultural based. But if you look at the insurance products around agriculture, there have been very few, but they are there. They are there now, and you can cover some of these risks, but you need to be very specific about it. Just like business losses, they are there, but you need to be specific and specifically request for these losses to be covered. And again, it is a contract. Nobody will default on a contract that specifically states they're going to cover something.
All right, thank you so much, Alex. As usual, it's always a pleasure listening to your thoughts. And so on behalf of the chairman, on behalf of the executive director, the members of the secretariat, Dan, who's always doing the social media and the marketing, and Eric, our technology partner, we want to really thank you and to appreciate you for your time. I'm hoping that we'll be able to reach out to you. I know you haven't shared your contacts so that we can reach you. They're right there at the end.
Yes.
So, if you need to reach out to Alex to just, pick his brains around insurance, his contacts are at the end of the presentation. And I want to say a big thank you. For the rest of the members, let's look out for our next webinar, which will be on Friday next week, same time at 10 o'clock. And here we'll be talking about taking action to improve employee mental health. And our facilitator will be Eddie Kimani, who has lived the life of struggle with mental illness, and we'll have some psychiatrists as well within that session. So we'll see you on Friday next week. God bless and keep safe. Asanteni sana.
Thank you so much.
Thank you.